Hello folks, I'm Shashank. You're watching Ditto Insurance. We've helped over 8 lakh Indians choose the right term plan through spam-free, honest advice from our IDEA certified advisors. Both ICICI Prudential and Axis Max Life are our partner insurers and among our top recommendations. But like always, this is going to be a completely unbiased comparison based solely on features, performance, and value. If you want personalized help determining which plan suits your specific situation, book a free consultation using the link in the description. Our services are completely free. Okay, now let's start with the performance metrics of these two insurers. The data that you see on screen covers 2022 to 2025 averages, except for the amount settlement ratio, which spans 2021 to 24. Now, what immediately stands out is Axis Max Life's exceptional operational performance, leading the industry on the most critical metric. With a claim settlement ratio of 99.62%, Axis maintains the highest approval rate among all major Indian insurers, statistically giving you the best odds of claim acceptance. Their complaint volume is notably lower than ICICI's. Now, both are well capitalized and have strong parentage, so metrics-wise, both are solid. Okay, now on to eligibility and basic structure. Both plans allow entry from age 18 to 60, with ICICI offering coverage extending to 99 years, while Axis provides coverage till 85. Both offer multiple premium payment options, including yearly, half-yearly, quarterly, or monthly, but ICICI does not do quarterly payments. Now, this provides flexibility based on your cash flow preferences. You can choose between single pay, limited pay options, including pay till 60, or regular pay structure in both plans. Both plans accept salaried and self-employed individuals, though they are subject to medical and financial underwriting to determine eligibility and pricing. Minimum sum assured starts at 50 lakh rupees typically, with no strict upper cap for either, though underwriting determines final coverage based on your income, education, age, and health profile. Okay, now let's examine the benefit variant structures that these plans offer. ICICI iProtect Smart Plus provides 3 key benefit variants. The life option pays a lump sum death benefit if the insured passes away. The Life Plus option adds an additional accidental death benefit on top of the base death benefit if death is due to an accident, with both components fixed at purchase. The Life Rebalancing option starts with both base cover and accidental death benefit, but the ADB reduces after the 10th year, though this variant is not currently live. Axis Max Life Smart Term Plan Plus offers 6 different variants, providing significantly more customization options. Regular cover is a plain vanilla term plan with fixed sum assured and lump sum payout, which is Ditto's primary recommendation for straightforward life cover. Early return of premium plus returns 50% of premiums at age 60 or plus 10 years, or PPT plus 10 years, and remaining 50% after policy ends, while retaining 50% life cover in the second half. The significantly high premiums makes this less attractive. Smart cover provides 150% of base sum assured for first 15 years, then drops to base cover thereafter, making it Ditto's second favorite variant, ideal for those in their 30s or 40s juggling loans and family responsibilities, though only available with limited pay. With remaining at 100, whole life cover returns 50% of premiums at age 60 or PPT plus 10, with remaining at 100. But actual cover drops to 50% of the original sum assured after age 60, making value proposition questionable. Income protection pays nominee fixed monthly income for 10 years or till end of the policy term instead of lump sum, though we recommend lump sum for greater family control. Regular return of premium returns all base premiums if you survive the policy term, but costs 1.5 to 2 times more than pure term plans with returns, and it's not adjusted for inflation. Now, this variant complexity is both Axis strength and potential confusion point. You get tremendous flexibility, sure, to match the life stages, but must choose carefully to avoid overpaying for features with limited long-term value. And that's where we come in. If you'd like our help, you know where to find us. The link is in the description. Okay, now a quick look into the built-in features of ICICI. ICICI iProtect Smart Plus includes terminal illness benefit that pays a full sum assured immediately if diagnosed with a terminal illness, certified by 2 doctors with less than 6 months to live. Life stage protection allows you to increase your cover at major life events, marriage up to 50%, first and second childbirth 25% each, or home loan disbursement up to 100% increase. Axis Max Life Smart Term Plan Plus includes cover continuance benefit, allowing you to defer premiums for up to 12 months after the 3rd policy year without losing coverage. Then available at 5-year intervals, providing similar deferral to ICICI structure. Terminal illness payouts pays part of sum assured immediately upon terminal illness diagnosis, capped at 1 crore rupees. Special exit value or zero cost exits starting 30th policy year, and get base premiums back excluding taxes and riders, as long as you're not in the last 4 years of the total policy term of at least 40 years. Insta payout on claim intimation pays up to 2 lakh rupees within 1 working day of filing claim after the first policy year, providing quick buffer for immediate needs before full claim settles. For female policyholders, Axis offers Lifeline Plus, where if male spouse passes away during policy term, you can apply for top-up of up to 50 lakh rupees or 50% of base sum assured, whichever is lower, subject to underwriting. Available for married women under 50 with at least 10 years of policy left. ICICI's life stage increases allow up to 100% of home loans, while Axis doesn't offer equivalent increases. Axis's female-centric Lifeline Plus feature demonstrates inclusive product design that ICICI does not offer. Axis's zero-cost exit requires longer 40-year tenure versus ICICI 30 years plus, creating different planning horizons. Okay, now let's compare the optional riders that both of these plans offer, because this is where you can customize protection beyond just basic death benefit. ICICI offers critical illness rider covering 20 or 60 illnesses where lump sum is paid on diagnosis in addition to the term cover valid for 20 years with 90-day waiting period and 15-day survival clause. And this is non-accelerated, so base cover stays intact. They also offer accidental death rider providing extra lump sum if death is due to accident within 180 days, though since accidental deaths are already covered under base policy, this rider adds limited value and may not justify additional cost, hence we don't actively recommend that. Axis offers Waiver of Premium Plus rider where if diagnosed with listed illness or suffer dismemberment, all future premiums are waived off, helping you stay protected even if you can't earn any more, though only available on limited pay options and not with regular pay or pay till 60. Critical illnesses and disability rider provides lump sum payout on diagnosis of up to 64 illnesses, helping manage non-hospital expenses, recovery time or income loss. Though rider only is available for 20 years, so won't last full policy if terms extend beyond that. However, if you're confused about which riders actually make sense for situations and which one are just added expenses, just book a free consultation with our advisors using the link in the description. We'll help you out for free and there will be no spam. Axis also offers accidental death and dismemberment combining payout for accidental death and permanent injuries, which unlike critical illness rider can extend till the end of policy, making it valuable for long-term disability protection, though we generally don't actively recommend accidental death riders duplicating base coverage. Both plans offer comprehensive critical illness coverage with flexible tier options. Axis's Waiver of Premium rider on limited pay provides valuable protection. ICICI doesn't offer as standard. ICICI's 20-year critical illness term matches Axis duration. Axis covers 64 illnesses versus ICICI 60. Now let's examine how the nominee can receive the death benefit under these plans. ICICI iProtect Smart Plus offers 4 payout options for Life and Life Plus variants. Lump sum pays the full amount at once. Income option pays 10% annually for 10 years. Lump sum plus income lets you choose a percentage as lump sum with rest paid monthly over 10 years. Increasing income grows payout 10% each year for 10 years with total payout at 145% of sum assured. Axis Max Life Smart Term Plan Plus offers similar payout flexibility depending on variant chosen, though specific options should be confirmed from policy documentation. Okay, now let's talk about discounts because these can significantly impact your first year premiums. ICICI offers 12.5% discount on first year premium for salaried individuals going with regular pay, 15% for limited pay, and 1 to 5% online discount depending on age, sum assured, and payment frequency. Axis provides 15% on first year premiums for salaried or existing Axis Max Life customers and offers sum assured booster options where instead of discount, your sum assured is bumped up slightly, remaining fixed for entire policy term, available only with regular and ROP variants. Both insurers recognize lower risk profiles of salaried individuals through preferential pricing. ICICI's clear percentage-based discounts are more transparent, while Axis's sum assured booster provides alternative value proposition worth evaluating with an advisor. Now, both provide age and sum assured based variations, though structures differ significantly. Okay, now let me pull up the premiums on the screen. Take a look at the different price points for different profiles. What's immediately apparent is that both insurers position themselves competitively in the mid-range across most profiles, with neither dominating on pure pricing. For young professionals in their 20s, Axis Max Life shows slight pricing advantages in several segments, particularly for female buyers, while ICICI remains competitive. Now, as we move into the mid-career profiles with higher coverage needs, pricing converges closely with minimal differentiation. Both trail behind Bajaj's aggressive pricing but maintain reasonable positioning against premium brands like HDFC. The trade-off here isn't about cost leadership, it's about feature richness, claim track records, and service quality justifying the premium gap over pure discount players. Axis's industry-leading claim settlement ratio and ICICI's higher amount settlement ratio both provide tangible value that pure pricing comparisons don't capture. So folks, neither plan will win on lowest absolute cost, but both justify the pricing through comprehensive feature sets, strong operational metrics, and flexibility adapting to different life stages. So folks, that was it from me in this video, and if you'd like any help from our advisors, do reach out to us with the link in the description, and I will see you in the next one. And let me remind you that no plan is the best. What works for you might not work for someone else. So make sure that you speak to an advisor before choosing a plan. I'll see you in the next one. Until then, happy insurance hunting.